why 93.7% of investors always lose money. When you look up the same question either on Google or on more reputable websites out there like the Wall Street Journal, you find that between 80 and 95% of day traders are always losing money. So the number here doesn't really matter. You might as well pick a random number just like I did here. But what matters is that a lot of day trader investors are losing money. Today we're gonna talk about two main reasons why that is, and then I'll give you my suggestion on how not to fall for it. Number one, trying to get rich quick, also known as greed. People lose money in the stock market because they believe this is their ticket to get rich quick. I mean, let me know in the comments below if you've done that. I personally did that myself, especially when I first started trading. I believed I'll be a millionaire tomorrow. When investors try to outsmart the market by constantly buying and selling, eventually they lose almost all of their money. You know what actually amplifies this? There are so-called day trading gurus out there that are trying to sell their courses online. But if you follow what they're saying, then probably 99% of you will end up losing money, not making money. My suggestion here is to ignore those get rich quick pitches, also ignore those must-have investments, and instead focus on long-term investment. If you choose to buy an investment, do so because you want to hold it long-term. Number two, letting emotions drive investing decisions. We are humans and having emotions is natural. It is actually a God-given quality. With investing, emotions tend to create very costly mistakes that lead to very bad decisions. Here are a few things that only amplifies your emotions. Media scares you. Market fluctuates up and down. There are many experts telling you what to do. Your attachment to specific assets like specific companies. Instead of buying low and selling high, you let the emotions get the best out of you and you buy high because everyone is buying it. Then things settle and what you bought high now has to go through a correction. You panic and what do? You sell. You sell at the worst case, meaning you sell very low. This cycle repeats and you're left with less and less money. Here is my suggestion for this problem. Instead of playing with individual stocks, I suggest you pick good index mutual funds and keep investing every single month, whether the stock market is down or the stock market is up. In summary, what I want to say is don't be one of those statistics that I mentioned earlier in this video. Instead, choose long-term investing in great index or mutual funds. Watch this next video where I talk about simple investing advice that could bring you millions. Until next time.